There we go. Pardon for that. Apologies. In terms of this, I won't cover it, the specific microphone. Some of you may have had audio if you were in the back group. Otherwise, you didn't have audio. Apologies. Let's talk about New York. This is London with Bitcoin Spike and VIP Trader. We're talking about the showstopper would be Bitcoin. Let's dig into the details. I've got a side button here that it'll let me hit it, and then it'll still have it on mute. So apologies. You guys may just say, well, I want the technicals anyway. Don't worry about the commentary. Looking at the specific inverted half diamond that we were looking at on the hourly. We also have a confluent flag. Now, the flag is a micro pattern on Bitcoin. We know that. Looking at the framework, it's guys, it's always a little dicey to trade specific micro flags. Okay, you can get into a little bit of trouble if you overplay them and they decide to collapse back down. Let's take a look at the function below. Hope you're all doing well. Excited that we caught the move to the upside. Yeah, the 200 weekly moving average, that was the way to be. But take a look at this preceding bull flag to the upside. You see how we grinded along that specific hourly, very uncomfortably, that 20 moving average, and finally, bam, up free and clear, over and out. But that's just to show that at times these micro bull flags, again, micro bull flag here, just pay attention. Anytime we say micro, just take a look. It can get a little bit messy. We like big patterns. You guys know that. We like the larger patterns, essentially the larger the move. So we're just consolidating, and it's not conducive to going large. Bam. Hitting it, I'll say, without a stop loss, without a lot of practicum involved in these micro patterns. Just want to make sure that you're all aware of that. We had a nice rebound to the downside. Looking at this flat top resistance, we had a nice return to the flat top resistance, and we're trying to break out of that inverted half diamond right now. Pushing up and over the threshold was that 20 moving average. That's what we've been looking at on the hourly. So bulls, you've taken control of that. I'll say right now the 15-minute is on target. 20 moving average established on Bitcoin as resistance. Multiple hits in, 1, 2, 3 hits on that specific 15-minute time frame is a controlling time frame right now for you traders to look at our capital control line, RSI stochastic and MACD, as well as that 20 moving average. We've got about 8 minutes left with New York. It's been a nice day for Bitcoin. Small push up after that rocket ride to the upside. So 15-minute is a nice controlling time frame. And remember, on the daily for Bitcoin, we're trying to hold up and above the specific, but above that specific second standard deviation. Absolutely, without a doubt. And we are hammered up and above that weekly standard deviation as well, which is in play. I'm going to say it's in play until it's not in play, okay? That's the level ultimately that we need to hold up and above, is that weekly standard deviation to the upside. In terms of the 6 hourly, let's go ahead and note on that 6 hourly, a popular time frame for us to consider. Boom, right into today, the short engaged on that capital control line. Nicely done, very nicely done. Great short, boom, into that bearishly controlled RSI stochastic and MACD. The top standard deviation didn't have it, did it? No, it did not. That 6 hourly was perfect in terms of the trigger. That's the time to pull it. That's the place to set it. Yeah, heavy margin, tight stop loss would have been very nice on that. If you caught it, congratulations. At 6 hourly, hammering in, proving its relevance. We're not crazy about the 6 hourly, guys. It's just proven to us that it's highly relevant. So we have to pay attention to it. That's what we do. Let's take a look at Tesla real quickly. A little bit of give back syndrome on Tesla and on the markets overall. Had some disappointing earnings incoming on the tech front, so it seems to have spilled out. Let's take a look again at that 15-minute on Tesla. 15-minute gave us some nice, actually, let's look at the specific hourly, which gave us a lot of nice hits this morning. Right on the open, Tesla, and these were nice hits. Pay attention. This was a nice level of engagement to the upside, over 2%, over 2.3%. Multiple hits over 2%, 1, 2, and a third one about a 1.5 or so percent in this level. Actually, yeah, 1.55. So looking at the multiple hits here, we'll say over 2%, over 1.5%, another straggler here, retesting this level. We did fall into guys, a condition underneath that 20 moving average, right? So looking at the framework, technically a target below, as we have capitulated below. First of all, great entries, great trades in this area with that level of proficiency here. Bam, bam, that precision. Anytime we see precision, what does it say to us? Big trade. That's just it. Get used to seeing an exact hit and think big trade. All right. The question is, how do you deploy the specific tactics to make it a big trade? How do you protect yourself and keep it a big trade? You got it right. Those are the elements in play that we focus on here. We don't want everyone to focus on it. We just want the good guys and girls to focus on it. That would be you. Alrighty. So looking at the details on the 6 hourly, we're trying to hold this notion of an inverted half diamond. Guys, it's not a popular pattern that I like a lot. I'm not going to mention it all the time, but it is there. If we had the topside structure on Tesla, we'd say, well, that's a diamond bottom formation. But to the extent that it is, it's going to trade or not, we are down and out. We're looking for engagement at lower levels. This is bottom line on Tesla. Again, the 15-minute is going to be the controlling force. We're going to need to get up and over at least that capital control line. Look at all these trades. Look at all these trades along the 15-minute. Bam, beautifully well done. If you're looking on the 15-minute, if you traded on the 15-minute today with Tesla, this was a rock and roll session with Tesla along the specific capital control line. Without a doubt, that is a sweet looking chart. Way to trade. If you traded that in and out, I'm impressed right now. I'm just impressed with the price action, the confluence with our capital control line. That's what's going on, guys. That in the market, you see technicals lay themselves out like this along the line. We love it. We love it. And Tesla will do it. You guys know that. Tesla will do it and she'll come back for more. Boom, grinding down, right? Give me that precise level, that exact level of interaction, and let's rock and roll. That's the idea. That's the name of the game. Underneath, again, on that 20 moving average, target below technically bottom side band. With that said, we have a lot of pickup space here in and around that. What is that 206 level? 206 is going to be hot. It's loaded with orders right now. You know that. In terms of any kind of a carry trade over through tomorrow, it's a difficult call. We're coming into a preceding level of support, which is quite low. If you caught that golden pocket below here and participated, guys, a maximum on Tesla over 9.5%, really from the bottoms of the high, over 9.5%. That's a sweet trade, guys. Bitcoin went 10 plus the other day. NVDA was down double digit last week as well with Tesla. If you can catch this kind of double digit move in the market, you're doing great, okay? Work on that precision, work on those tight stop losses. The one thing I just want to reinforce today, once you've made money in the market, what's the plan? The plan is to hold on to the money in the market, okay? Okay, once you've made money in the market, what's the plan? Hold on to the money in the market. Do not give it back to, don't give it back to the market makers with some sloppy trades. And all of a sudden, what you cared about with 5 grand, 10 grand, 50 grand, 500 grand is no big deal. You're just gonna go ahead and just hand it out around the party. No big deal. Everybody have 100 grand. Everybody just have 500. No, everybody have 5 grand. No, rein in your level of proficiency. Your skill set, your tactics become sharper, right? You had a great week, you had a great month. Have a better week the next week. Have a better month. Make sure that the profile that you present, the skill set that you present, is not one that becomes lazier, is not one that relaxes and starts swinging with the Wild West, guys, gals. Don't do it. Become more proficient, become more exacting, require more of yourself if you have been successful. And that's going to be, guys, the primary driver in terms of creating just an overall. I want you to have months that you'll never forget. I want you to have quarters that you'll never forget. I want you to have years that you'll never forget, days that you'll never forget. Okay? Stack your experience on top of each other in terms of the disciplined nature that goes into trading. The market knows how to take money back. If you don't know that, you don't trade. If you don't know that, you don't trade. The market knows how to take money back. When you get it in, you hold on to it. And where's that next trade? You look for the confirmation. You don't become sloppy. You hit in with your stop losses. 100% of the time has to be done. Maintain the discipline. Step your way up in the market the right way. That's going to be with discipline, tactical engagement, no loose ends on the trade. No sloppy, well, we'll just go ahead and I feel like this now because we had a big week. No, we tighten up and we hit the next trade. Let's do that, guys. In terms of just a little bit of inspiration, we got to get it. We got to get it in. I've seen it go both ways, and you do not like the negative part of that equation, I promise. Looking at the specifics here on NVIDIA is a quick take here with a potential broadening bottom. Typically, it's going to be a bullish scenario. Typically, looking at the broadening bottom on the 6 hourly. look real quickly at the hourly. We are just riding along. We're going to test the specific lower band, the standard deviation. Okay, that's going to be on target right now. As we looked at that crossover today, nice cross under, really, and then that downside target hit. So that was a nice day on NVIDIA to get a breath of fresh air in terms of just the consistency with the crossover to the upside. Top side band is the target within the 80 to 90% threshold hit. Cross down through the 20 moving average, and we got that downside hit. We love it. Okay, in terms of the tactical approach, you say, well, it didn't go up. What to do? It's set underneath and hit your target to the downside. We look for that technical proficiency. We're always looking for the ones that behave well and the ones that don't. We know this is the case. This is just a fact. Now, you've got bears screaming. Bears are screaming on NVIDIA, just to let you know. They are screaming, coming unglued. They want this downside target. It's not much. It's just not much, but they want it. I'm telling you guys. On the weekly, the bears are screaming. They want it. They've got cash positioned here. They want it to move down to this lower band. You guys got it right. How unfortunate it would be if they didn't hit it this week, and what would happen? Well, the band's going to come up to you. Two options. Price can go down to the band, to the target, or it can just, the band can come up to price. You guys got it. So bears are a little bit, guys, tensely looking at this specific trade is like, give us something here. But as we look at the important dynamics, what we are going to note is that preceding nice constrictions on the Bollinger Band, guys, on the specific standard deviations. Preceding the squeeze is on. Boom, up and out. Let us consolidate. Let this tighten up, and we'll play over under. We'll play over under with the 20 moving average on the weekly. We'll do it. It's got a good track record in terms of really starting to move as we see that constriction in here. Kind of an exciting element, aside from all the technical and fundamentals that we've been through in the last couple of days as we have solidified into and out of the markets and our positions. I just want to encourage you, again, when I'm talking tough game in terms of the market, it's because I've seen tough stuff, guys. I've seen tough stuff throughout the years, and I want you all to just really do well with where you're at. And I mean you to do well. I want you to do well. I want us to do well. That is obviously number one on the agenda is you. You got it right. I want you to enjoy the market. I want you to enjoy your profits from the market. That's why we're in this business. And we're excited, guys, to close out the trading day. We'll be up and at it tomorrow on Bitcoin. What's the call on Bitcoin, huh? Well, this is the call. Let's go through it real quickly. Maybe I'll be sorry I did this. Now, first of all, I don't want to just encourage eternal shorts along the 6 hourly cap line. Okay, I don't want to. Did it pay? Yes, it paid. Was it an exact, high, precise level function hit? Yes. Was it just a nice trade? Yes. Were you off by maybe $2? Maybe. Was it a beautiful trade? Yes. Pay attention when you see that level of precision. You also hit into your 8 hourly here, but note your 6 hourly was a level of precision that 8 hourly lacked. Okay, so a bit unpredictable sometimes the 6 hourly, but we're going to pay attention. Just look at how price has grinded up and along that cap line. That's a line that we want to stay above. A near flat top, you guys will agree, nearly a flat top, right? Nearly, as we're going to look at this, nearly an ascending line of support. This one will be a home wrecker. We are going to agree, huh? This is going to be a home wrecker, if indeed to the extent that on the hourly we do not complete this to the upside. Just get ready. All right, get ready for it. We had an internalized ascending triangle today, and she may be in the home wrecking business. I don't know, guys. She's done it before, hasn't she? Bitcoin. I'm referring to Bitcoin, okay, and the fact that if we do not complete this to the upside, and half the market's saying we got a double top, the rest of the market's saying, man, we got an ascending triangle. Bring it. We just brought the heat this morning on an ascending triangle included. Now we got the bigger mamma jamma in terms of this, just a mildly larger pattern, guys. It's not a huge pattern. And what did we have? Let's talk about this just real quickly. In terms of that downward sloping channel, we did. So it was a constructive element within the dynamics of not only just being a bull flag, but also within the consideration capacity, considerable capacity that we're looking at any specific channel formation as being a part of an actual pattern framework. So you can see this and appreciate it independently of a flag, which we need that velocity, momentum to the upside, didn't get it. Instead, we just see this as a constructive element of the ball game, guys, in terms of this specific larger pattern. We always look for channels. It could be a bull flag, bear flag, or it can be part of a constructive, the construction of a pattern. So looking at that 35,260, call it the 35, nearly 35.3. We're going to be looking at a breakout potential, right? Be nice to have specific orders below that instead of just playing across the top of a breakout. I'll tell you this, if you have the momentum, it's not a problem. If you get up and out and busy quickly, you can trade it. You can trade it heavily with appropriate stop losses, etc. You know that. J-Mac in the house, California. What's going on? J-Mac, nice to see you. I know you're trading. I know you're doing well. Congratulations. It makes a difference, huh? Way to go. Nice to see you, J-Mac. Boom. Great to see you. Just talking about J-Mac, that this will be a home wrecker if indeed, to the extent that that Bitcoin decides that it wants to play a little bit squirrely here to the downside. We're going to assess our specific. We'll look at our momentum. So we'll look at our just guys our levels of resistance. As we look at the 5 minute, the 5 minute has been a little bit trappy around that 20. Noted. Well, definitely noted, guys, in terms of that 20 moving average has been the hourly has been just a grind session. You couldn't get off that 20, right? A lot of, I'd imagine some high frequency traders along this level here, high frequency, meaning in, out, up to and over potentially, guys, 100 trades a minute, like a lot going on. When you see this constriction here on the hourly, or you see like a constriction like that, on the 5 minute, it's just there's a lot of trade action there. It's small, it is small, but when you have to dial into that, either the lower time frame to get the expression on those bands, this would be the 3 minute, which is even playing a bit coy here with that 3 minute, but looking at the framework for fire and ice, that's going to be the big ticket item. Okay, in terms of fire and ice, it just is. I don't want to be overly cautious, you know that. We don't want to be overly cautious, but at the same time, we want to be respectful of the market and essentially the potential of what you can and, essentially what's your downside risk exposure. Do you have a tight stop loss here? What are the, as we looked at earlier on today, the specific pickups for the Fibonacci retracements? You guys have that in the back. You've got everything. If you want to get, ultra aggressive, you'd have maybe a 20 level set here in terms of looking at guys, your specific scale in, managed futures, etc. It's been a great couple of weeks. I just want to inspire you all to do better. If you've done well, do better. Okay. In terms of the opportunity that this is, I'm going to just remind everybody of one thing. Let's look at one big thing. While everyone gets excited, etc. Look at where we are. Let's look at the daily. You see where we are. We just had a great move. We caught it 100%, 120%, 200%. We caught it, guys. Just in terms of how dead on we were with that specific move. Now, you've got this level of resistance, no big deal. You can do your technicals. I just want to reframe into the specific issue at hand. Is look how much room we have. Ask anyone who thinks that Bitcoin will or will not ever go back and set a new all-time high ever. I want you to appreciate the fact that you've got 90% just getting back to that level, more or less, about 60, what did I measure that up to, 66? You've got over 90%, almost 100% gain, okay, to work with to get back up to that level. To the extent that we can get lower prices, why do we like lower prices? Because the amplitude measurement is more significant on a percentage basis. Does it mean we want to go down? No. Is it just over couching because we don't understand? No. You know your probabilities. You know for a fact, based on the last 40 plus years, really the entirety of the market has been analyzed in the most proficient way that we have found in terms of empirical data. You know your percentage probability of hitting back at the level of preceding level of resistance. You know exactly what it is. You know exactly the percentage probability of us hitting into, let's just call it the 39.5. You know the exact percentage probability. max probability. Your just call it guys ballpark on going to be on your wicks or otherwise, but going to be 40 G's. Now this big kahuna here is the major playing field. Major playing field. I'm just talking about the guys who are playing in the majors on the playing field. Looking at this, big time, big time. Oh, we're just cruising up. We're going to power through. That's no big deal. I'm going to tell you, if you draw the specific low to the high, carry up your Fibonacci extensions based on the preceding move, and why would we do that? What is that telling us? Get your parallel channel out. Get your parallel channel out. Essentially, you are fully aware that the mid-level of a channel, as we look at a particular expected move to a level of resistance on a carry-up, and this is independent of any other patterns that we know that are in play, i.e. the bump and run. We capably broke out of that, didn't we? We did. We were expecting that at some point in that bump and run, right? The lead in with the bump. We want the run. Now, just going to say that specific 50%, that is a big deal. That is a big level to crush. Isn't it? Where does it put us? Right at about that golden pocket on the extension basis, which is the particular preceding amplitude carried up and over and out. What do we need for that measured move to get back to, right? If we got the 1, 2, 3, we want the 4. 1, 2, 3, 4, we want it. So very standard dynamic in terms of the expression of our extensions based upon the preceding move, that derivative gain, right? Where are we at? We're at 50% of that move. So is it just a foregone conclusion? Well, we're up, out, and over that 50%. If you've traded enough and you've watched these enough on let's say cross asset, market between bull and bear, etc., you know these don't just vanish, do they? They can. They certainly can. But we learn to respect these big time. We use them as qualifiers. They're levels of, guys, they're just measured moves. It's a measured componentry based on just a host of parameters in terms of the just the foundations that we look at. It is what it is. Next stop, we're looking at that 40,000. So the 40,000 confluent with the golden pocket on those extensions. And again, the low to high brought down to the low here, bam. Okay, this preceding move, we're at 50% of the preceding move. We've completed half of this move from here to here, right? If we can get to the golden pocket, it's going to be confluent with the specific curvature and handle, features. You understand where we're at? We're going to need to maintain some momentum, to regather some strength. We're going to need to be able to operate in overbought territory. Okay, we're going to need to be able to operate in overbought territory, and we need to continue to see buying. Okay, an overall cataclysm in the markets. I'm just going to say this. You guys know that. I don't want to speak poorly at all, but some definite news would be nice. Some real driving definite news would be great to see. And we're going to need to get up free and clear from this specific level, right? We're just going to need to do it. I'm going to say this, it's not wrong to say that orders are parked at this level. We have traded so many hundreds of these and hundreds of these and hundreds of these the last number of months. You know this, live and otherwise. That cup and handle on breakout, where are the orders? What are you doing? You're prepared to rock and roll. You are prepared. You got a position from underlying? Great. Let it rock and roll. Let it hammer to the upside. An amount that's comfortable after you have already computed in and taken the profits you want from the market. You've got some free dice at the craps table. Roll with it, okay? As you look at the details, though, or the percentage probabilities, you're going to get to a deductive rationale where it's, okay, we have a 1/3 chance of going here, and we have a 1/3 chance of going here, and we've got a 1/3 chance of going sideways. Okay, if you don't arrive at that and you instead arrive at the answer, I'm going to challenge you. If you instead arrive at the answer that no, we've got a 75% chance of going here, we've got a 75% chance of going here, and we've got a 75% chance of going here. You can read it both ways. You can get involved in it and you can look at it and say, well, no, actually, at some point we do have like an 85% chance of getting up to the 40K, but it's from this level or after a rebound, because you've got the majority in your favor, as well as revisiting the bottom line preceding flat top resistance on that cup and handle. So you can take the odds and you can go lay it all on the table if you want to, or you can do some deductive reasoning and saying, okay, I need to be a little bit cautious here because I've got a majority probability saying north, saying down, and we know Bitcoin likes to carve sideways. So you can reduce the risk involved in your probability set if and when conflicting and become reductive, or guys, have some deductive reasoning. Let's just call it that, deductive reasoning, wherein you're not maximizing a probability and operating there with to the potential detriment of an increased risk equation. Okay, you can do that and say, okay, I got a 1/3. It's just protective. I've got a 1/3 possibility of going to 40K. I've got a 1/3 of going down to that specific 32,000, and I've got a 1/3 of potentially just going sideways for a while. Split it up in thirds. What does that do to your capital? It's going to change the way you look at the capital, rather than just, let's say, your capital involvement. Rather than saying I've got an 85% chance of going up. Hats off. Let's roll. Let's put the house on it. Let's put the ranch on it. We got an 85% chance of going to $40,000. Okay, that's fine. But you also have a chance of going down to preceding level of resistance to then get up to that level. So we've seen Bitcoin be as catchy wants to be along this specific route. Okay, so not to throw just mud on on the wall. It's not the intention. Just be smart. You did well here, bam. Let's continue to do well. Stay measured in your approach. I know that your technicals beat everyone else's. I know that for a fact. I know it's a waste of time for you, literally, to spend time looking at anyone else's technicals. I know that for a fact. So in the same regard that I want you to protect yourself and your involvement in terms of what you're allowing mentally into your trade game, and you're good enough, you know you're doing that. I want you to discipline yourself as well in terms of, yes, tight stop losses. This gives me the question, what's the next big trade? It's not on a peripheral altcoin. It's not on a know nothing, okay, let's get all excited and the whole market's, forget all that, guys. Forget it all. What's the next big trade? Settle down, realize you could make a great amount of money if you can just focus enough and identify the next big trade. We'll get there, okay? We'll get there. It'll take us there. First and foremost, we have a bit of a stair step in and around that specific extension that we'll just call, the potential, I don't want to call it the potential home wrecker. It just is, guys. You know that, because everyone's expecting this just to continue to go up, which becomes dangerous in and of itself. It looks like a nice pattern thus far. Reconfirmation here, but it is telling you one thing, at least suggesting it with all her tricky ways that she can possibly, guys, show up in the market. You know that. Looking at flat top resistance, ascending line, bam, bam. What's that? Confirmation hit. We see it, commonly see this in the market. All right. So you have to be prepared for a level of engagement. Structure the market around the other traders. Structure it around the other traders. You're up and out. At least structure the market around the other traders. We agree. At least, if we're looking at this, at least structure the market around, on the daily, the other traders. There is no reason not to structure and participate in structuring the market. Trade this on the 30-second. Trade it on the minute, the 3-minute, the 5-minute, or the 5-second. You will learn that you need to structure your trades. I'm not wrong. It's not a suggestion. It's not a commentary, a maybe, guys. You will learn that you need to structure in and prepare for rehits. It's on the macro. And so we don't want to just necessarily say it, because we could be wrong and we don't want to miss the move. Man, I see something play out 90% of the time on equities. Let it burn us. Let the market show us something 90% of the time in terms of the preceding number of weeks, in terms of a revisit on this level. Let it be the market's fault, because we've seen 90% of these to preceding flat top resistance, and that's verifiable. We got it. That is literal empirical data that we have seen with the hundreds or thousands of these specific patterns that have been shown to us. So let it do what it wants to do, or the market maker, the conniving market maker, do what he wants to do. But in terms of the overall empirical integration that we're going to look at and say, based on back testing, this thing, if it wants to go the 1 out of 10 and hit a 10%, fly up to the upside, all we know is 90% of the time we've seen this re-hit here, just period. We know that. So at least participate in the restructurings. That means short. Everybody's short. No, it means you have levels of reinforcement that we talked about on the daily, right? Standard deviation that we talked about, incoming 6 hourly, 8 hourly, 4 hourly, even in the mix in terms of capital control lines. We have levels to reinforce along the way before we get down here, but structure yourselves adequately. Just, you guys know that. I know that you know that. I just want to reinforce what we've seen. It's not conjecture. It's not maybe it's going to do this. Maybe no. We have the empirical data. We spend enough time with the actual technicals to be able to tell it. Sit down. Let's have an interview. What's the market doing? Who's going to know? We're going to know, like big time. Not just, well, generally based on page 300 of this book and what this author says. No. We know. We absolutely know. We pride ourselves in our group as actually knowing, because we spend so much time with these patterns. No one spends more time with these patterns. No one is developing tactical apex pattern target rules. Are they? No, they're not. What did we hit? This is sweet. What did we hit on the DXY? You got it right. We hit the target, didn't we, on the DXY? Yes, we did. What did you just come up here and hit? I tell you, when we let these go, we want to get as far away from the specific target as we can. True or false? And I know you guys are like, come on. Yeah, come on. Bring it. This is nice. Failed descending wedge. What do we have? We had a divergence between price line and pattern expectation. Expectation was to go up at this level, pre-Luna. Yes, indeed. And what happened? We had a divergence of price line to pattern expectation. Boom. So what became our target? The apex, the conclusion of the demand agreement of the buyers on support, sellers on resistance. Indeed. What did we just hit? Boom, boom, bam. That is nicely done. That's nicely done. You'd be like, yeah, but we had to wait a year for that. Man, God. Wow, we would have been happy to have waited a year and 2 months if we could have gotten, let's say, an additional $10,000 discount on Bitcoin, right? It takes a while to get down there. People have to adjust. Things happen. But it's a great recovery into a target level. We saw it also on the DXY. True? What's going on? DXY extended its journey to get back to its target as well, didn't it? You better believe it. But what a reconfirmation of the strategy. It'd be great to say, oh, no, within a number of days we're going to hit that target. That'd be great. That's not the way it goes. And I've been telling people we want it lower for longer, right? Fed, SEC, what is it? No, Fed, Powell. Talk about we're higher for longer. Well, we want a Bitcoin lower for longer. Get that runway stretched out and then take off. But nice to see the recovery. Manage into, schedule up, and pay attention to your wedge tactics, not just on this macro daily target hit. Okay, I bring that up in the context of us saying, what have these been doing 90% of the time? 90% of the last 1,000 of these in the market, literally? Yes, the last 1,000 of these over the preceding number of months. 90% of them have gone back to this level of resistance in the overall broader markets that we've seen. Okay, period. So let's see what we got. Just be prepared, and let's look for that next big trade. Okay, well, look for the next big trade. If you took profits, great. Congratulations. Great start to the fourth quarter. Let's keep it rolling. Yeah, let's keep it rolling. Hi. Good job, guys. Good job. Is a revisit required? No. You have a 1 or 2 in 10 chance, maybe a 1 or 2 in 10 chance of let's say you have a 20% chance of just adios, sayonara, forever. I will never see you again. Yeah, that specific. This just proves it, huh? You probably have like a 10% chance of never hitting this again, right? You hit it. Good job. This is London with Bitcoin Spike and VIP Trader. We'll be in the back. We'll go over some patterns. Congratulations to everybody who's been trading. Congratulations if you caught that move up and over the hourly. Wasn't easy. We finally got there. Nice to see that we did get there up and over that threshold we were talking about. You're just right along capital control line now. That blue capital control line. Guys, let's get in the back. Let's trade. This is London with Bitcoin Spike and VIP Trader.